Hello, everybody. This is the Provider Relief Fund reporting webinar by Healthcare Business Specialists on August the 18th, 2021. Welcome and thank you for what you guys are doing. I know that COVID-19 is back with us and it seems like it's more dangerous than ever. So thank you guys for what you're doing. My name is Mark Lynn, CPA from Chattanooga, Tennessee. I've worked with the Rural Health Clinic program for a good 30 more years than I want to admit. But a long time. There's my contact information if you need to get a hold of me. Here is Danny Gilbert. Danny is going to be on the background. She will be answering, giving me questions and things like that as we go through as well. If you need to get a hold of Danny, there is her contact information. What Healthcare Business Specialist does is we prepare cost reports, prepare a lot of cost reports here. And a lot of you guys were late this year, so don't be late. That's too stressful for everybody. And then prepare program evaluations. We do a lot of startups. Everybody in the world wants to be a rural health clinic all of a sudden. We do emergency preparedness. And if you're in Tennessee, Danny loves doing these weird things called 10-care quarterly reports, which I have no idea why she loves doing them, but she does. And so that's what we do. If you've not joined the Facebook group, it's not our Facebook group, it's your Facebook group and everyone's Facebook group. We have about 2,700 members in it, and if you can ask questions, there's a lot of people on there that are a lot smarter than I am that will answer those questions for you, and I appreciate the community being so robust and so willing to help other people. We do have a website called ruralhealthclinic.com. And we have lots of resources on there. You can find pretty much any resource almost that you would need on there. And of course, it's all free. And this is where we're going to be putting this presentation is being recorded. Danny, double check it, make sure it's being recorded so we don't mess that up. And also, I lost my train of thought when I said that. Also, your slide presentation will be on there as well. We've already put it on there. And so your slide presentation will be there. It will also be in the Facebook group as well. And we do have Elizabeth Burrows online with us today as one of our panelists here. She's an attorney. She's the one that helped you get that, I think maybe 40, 50 of our clinics get the $49,200. And there's more money out there as well. Elizabeth, you want to tell everybody about the opportunity? I know we're gonna have you on for another webinar next week to explain people how to get that money. But if you'll tell people what's going on, that would be great.
So there are two opportunities available for funding. One is for a consortium, and you have to work with other partners, and the other is solely for more or less telehealth, renovation, alteration, building, bricks and mortar funding. It is similar to how USDA Rural Development ran their community facilities program. It is specifically for nonprofits and towns and communities, but I believe we figured out some ways around that. So if you are a for-profit RHC, you can still benefit if you partner with a unit of government or with a nonprofit organization. Feel free to go online and check that out, or you can contact me. And hopefully after the next couple of webinars from USDA, we'll have more information. I know many of you have reached out to your local offices who are still kind of saying, hey, we don't know what's going on. This is unprecedented for USDA to have $500 million to give out. And this, usually they don't have near this amount in grants. It's always with loans. And typically it's more for businesses, water systems, and sewers. So this is different, and we're all gonna learn together, and let's hope that we can have our rural hospitals, rural health clinics maximize on this opportunity and make sure they spend it for you guys so they can recognize that you do need continued funding. So join us next Friday, and if you need me in between, let me know. Thanks, Mark.
Okay, thank you, Elizabeth. I appreciate everything you do for rural health clinics, FQHCs, and all the different things that you work with. More good news besides the $500 million up there for rural is if you're one of the 360 RHCs this morning that found 100 grand in your bank account, then you're very happy. There was a second distribution of that 100 grand. If you're one of the unhappy people that thought you were going to get one and didn't, Nathan did reach out to me this morning and I think Nathan and Shannon Chambers are in a HRSA meeting. I think every week they have a meeting with them. So they're tied up right now. But if you thought you're supposed to get that 100,000 on the second round, go ahead and reach out to them at either RHC COVID reporting at narhc.com, or I think Shannon is at this other email address a lot as well. So if you thought you're supposed to get it and you didn't, that's how you would take care of that. But that 100,000 is in the COVID testing and mitigation bucket that we'll talk about in a minute. Disclaimer real quick, everything is up to date. As you can tell, I just went over something that just got announced this morning. So keep that in mind. We are also recording this if that's an issue. We still don't have all the answers. The last 18 months have certainly humbled me and humbled my ability to see the future. I've not seen some of the things that have happened. So keep that in mind, as we don't know all the answers yet. And when I go through these, you'll see me asking questions about, I don't know about how we're supposed to handle this. We will eventually have another webinar in the next couple of weeks on this as we learn more about the Provider Relief Fund reporting. So if you have questions, please type them in on the sidebar, and Danny will ask those to me at the end of the session. So let's go into reporting. First thing is, I've got a bunch of questions about what goes where. What am I reporting on is probably the biggest question I've gotten so far. And the way I've done this is I've broken down an Excel spreadsheet and broken into 3 different buckets. And we're going to talk about the green bucket today. This is your provider relief funding monies, and this is where we're going to be reporting this. And don't worry if these are really small. I'm going to break them out into bigger sections just in a minute. The blue section is this RHC COVID testing and mitigation funds. That's $100,000 that you guys got, 360 of you got this morning, and most of you got another 100,000 in June of this year. And in the previous year, you've been a rural health clinic before, there was $49,461.42 that came to you on May the 20th, 2020. Those funds, we don't have to report uses of those funds in this PRF portal. I think we have to report that we got them, but we don't have to report on uses of those. So keep that in mind. That money is not reported in this green section over here. And then what Elizabeth helped us to get last month, I guess it was in July when they announced that, and it just happens to be 49,000. Elizabeth, you know the exact amount, $240 something. You know?
It varied slightly. 49,249 was most amount, but some with multiples got slightly different. So it wasn't an exact set. It was very close.
Okay, so $49,249 each one of you got for that. Now they didn't put that in your bank account. You have to draw it down, and there's some keys to that. And we had a webinar, Elizabeth and her group had a webinar last week on how to draw that money down. So go back and watch that as well. But there's different reporting requirements for these. The RHC COVID testing and mitigation funds, you report monthly. You basically report how many COVID tests you did and how many were positive, and that's pretty much it. It's the people at the National Association of Rural Health Clinics have been working with RHCs since 1992 or 93. I actually went to the first conference they had in Washington, D.C., and they understand RHCs. They understand that we do not have a huge team of accountants, that all they do is just count all day long, because that's what this green targeted thing, that's what they expect. It is really burdensome, some of the stuff that they're asking for. And so we'll go through that as we go along. So I guess one of my key takeaways is going to be start now. I know that it sounds like we started pretty late, 42 days before the due date to be having this webinar, but Danny and I have been doing cost reports, so it's going to be tough. So here is the grant hesitancy, and Elizabeth will be telling us about what you have to do. I think there's a quarterly report that you have to do on that. Again, all this is completely different than what we're eventually going to start talking about today. So, and then Nathan did put together a nice little table that I've used quite a bit. These things that have the yellow arrow, these are the funds that we're going to be talking about reporting on today. This is the targeted distribution. That was the 103,000 plus that you received on May the 6th of last year. And then you received two smaller distributions on April 10th and April 24th. Those are going to go into what they call period one. These are the three payments that we're going to be reporting on. This phase 3 general distribution, some of you got, some of you did not get. It just depends on, I think you had to apply for this one. Most of our RHCs didn't apply for it, but that will go in period 2 funding. So we're not going to be worrying about this one today. We are going to worry about 1, 2, these 3 payments is what we're going to be reporting today. There's just to make it bigger for you guys. If you do have questions about the RHC COVID reporting, reach out to Nathan, Shannon, and Sarah Holman. Those 3 people can be very helpful to you on that. Don't come to me first, because I'm just going to forward the email to them, and you don't really want me in the middle of that. So those guys and they're fantastic. They've been really, really great about responding. And then if you have questions about the COVID hesitancy mitigation grants, again, don't email Mark Lynn. I don't know. I'm going to forward it to Elizabeth, and the National Organization of State Offices of Rural Health has been contracted to help with that as well. So probably you want to go to them first before you bother Elizabeth, and then if you can't get an satisfactory answer, which I doubt you would, then you'd want to reach out to Elizabeth as well. And then here is the portal that we're talking about, the green section here. Here's your portal that you're going to have to report this information, the reportable. And if you want to ask me questions, please feel free to email me. I'll be glad to help you any way I can. Here's the reportable distributions. We've already talked about 1, 2, and 3. We're going to be reporting on the ones that happened in April 2020 and this big, huge targeted distribution that we got in May of 2020. The reporting period for this first report was going to be April 10th, 2020 through June 30, 2020. That's when you received these distributions. We have to account for that money in this report that we're sending to HRSA, which is due by September 30, 2021. The key to this is there's going to be no extensions on this. We don't know what's going to happen if you don't report by this date. So it's not like the cost report where a bunch of you guys have sent cost reports in. I still got 4 cost reports to work on right now because I just got them yesterday that were due August 2nd. We got a little nastygram from Medicare saying you didn't file your cost report, and we want every penny we paid you last year back. We're going to fix that when we file a cost report and submit it correctly to them, which we will do in the next day or 2. I don't know how easy it's going to be to fix this if you don't get this done, because there's no extensions, and what they're telling us is if you don't file it on time, then we may recoup your money. So get this done. I guess that's going to be one of my key takeaways is we don't have any extensions there.
And Mark, make sure they know by the deadline, spend that money. So if you have to think ahead and think, okay, probably that's the order you want to spend it is Mark's money he's talking about today, then the money that we were talking about in the order that he did it. So those color schemes, and use the grant that I worked on last. But still make sure you use that funding. If you have to pre-spend or whatever to have a stockpile, at least you've got it bought, spend it on staff time or whatever you can do, because I guarantee you not a day goes by that you're not answering questions about COVID, about the COVID vaccine. So watch those deadlines, mark them in your calendar, because we think, oh, next June's forever. Oh no, it'll be here before we know it.
Absolutely. And so unfortunately, they basically told you about the deadline, June 30, 2021, after the deadline had already passed. So that was really not helpful. So those are what we're dealing with right now. Also, yes, and think about what Elizabeth said too on the COVID-19 testing and mitigation funds. The initial $49,000 that you received last year, that has to be spent by December 31st, 2021. And the $100,000 that you've just received today or yesterday, or in June, you have until December 31st, 2022 to spend those funds. So again, sort of a first in, first out method. I think what Elizabeth was talking about is you want to make sure that you cover yourself and spend the money when you're supposed to. All right, let's go back. Let's do a little timeline because this is going to be important to know. Number one, 6/11/2021, there's 11 page of reporting requirements that were issued by HRSA. If you go down to right here on the bottom here, this is a clickable link, and this will take you to those 11 pages. So you want to read those 11 pages. They added a bunch of stuff about nursing home infection control. And the other 3 or 4 incarnations, it was only 7 pages. This one was 11. But most of those 4 pages were related to nursing home infection control, which wasn't reportable before that. So read those 11 pages. Not a whole lot changed from the last incarnation of that document that we received in January of 2021. And then you'll hear a lot about period of availability. And period availability is just when the period of time that you have to obligate or spend those funds. And so this period here, the funds were dispersed and obligated must be spent by June 30, 2021. Period 1 funds, which was April 10th through June 30, 2020, have to be spent by June 30, 2021. You can apply that to lost revenues, and you can apply that to expenses to mitigate, to reduce COVID-19. It's prevent, reduce, mitigate. There's certain terminology they always use that if you're doing that, then you can use those expenses for that. HHS they explained to us what they mean by use. You don't have to write a check. You don't have to have the way I'm a CPA. So whenever I got my PPP loan, what I did was I put that money in what's called a Marcus account, which is an online account. Deposited the money there, and then whenever I used that funds, I wrote myself a check for that, and I kept all the documentation. I created an invoice and put it in a separate file, and I've been hanging on to that file. As a CPA, that's the way I would do things, but thank goodness HHS said you don't have to do that. All you got to do is report in this portal what your expenses were, what your lost revenues were, and keep good documentation on it, and you're good to go. So now, if it was me and you get all these funds going forward, I would still do it that way, that's because I'm sort of a obnoxious CPA. Okay, so next one, the portal is now open. So you can go ahead and get in the portal and start working on it. It opened up 7/1. Don't submit yet. When I worked through the portal yesterday, I got to the very end and I'm like, I'm not gonna submit. I'm gonna wait until September 30th is ideal. The last week in September is when I would submit, because number one is once you submit, you cannot change anything in that portal. You're stuck with what you got. So you want to sort of audit it and review it and step away from it and go back to it. So that's number one, is do not hit submit. And we still have some unanswered questions about what goes into this portal as well. So that's number one. The report is due, and again, this is a hard deadline, no extension. So September 30th is when your first report is due. So don't miss this deadline. It's going to be very important. Keep good work papers. The HRSA is saying you need to keep your work papers for 3 years. If you listen to a lawyer, he's going to say 6 years because there's some fraud and abuse types of things that they're worried about there. So you want to keep your work papers at least 3 years. 40 years ago, when I was taking Becker, which is a CPA training course, I paid $1,000 40 years ago for it. And the only thing I can remember was keep a well-labeled computation sheet. And that 40 years later, that advice comes in handy as we're dealing with provider relief funds. So document what you're doing, hang on to it, put it into a place where you can find it, scan it, and put it in Dropbox. But make sure that you keep up with that, because they're supposedly going to do audits on these funds. I can't see them auditing a whole lot of rural health clinics just because we're such small entities. I can see them going after hospitals quite a bit, because a lot of hospitals got $4 million and they don't know what to do with that much money, while our rural health clinics, as much as great as getting 100 grand sounds, or my CPA comes in, $4 million is more than 100 grand. So that I'm an auditor, that's what I'm going to look at. Okay, and then finally, looking forward there, the funds that you did receive in period 2, 7/1/20 through 12/31/20, that funds, if you received in December of 2020, those have to be dispersed by 12/31/2021. So going forward, if you've got some money there, what you want to do is spend that money before the end of the year. So that's our steps. What about your steps? What should you be doing? First one is register. The portal has actually been open since January the 15th, 2021 for you guys to register. If you've not registered yet, that's a very simple process. It takes about 15 to 20 minutes. There's a tutorial on how to do it. In fact, there's tutorials on all of this stuff. HRSA has been great about putting out webinars and tutorials and all sorts of information on how to do this. So it's great. So go through and read that information there. You've got the June 11th requirements. You also have 61 pages of FAQs that you can read. So these frequently asked questions, and they're updated all the time. So if you don't like an answer, wait a couple of days, you may get a better answer on these FAQs because it has been very fluid, and a lot of answers that I really liked, they've taken away. A lot of answers that I didn't like, they've added to them, and I like them a little better. So it's very fluid. It's very hard to make any decision making. And I always tell people, if you see an answer you like, put a ring on it. What's a Beyonce song? Put a ring on it. I would screenshot it and hang on to it and said, I made this decision based upon this FAQ that was on the website on August the 18th, 2021, because it may change tomorrow or it may go away tomorrow. And then watch the 3 technical assistance webinars and the tutorials. I've watched those 3 technical assistance webinars 3 times, each one of them 3 times already. And each time I watch them, I learn a little bit, something new about them. So here is the website that you want to go to get started. And if you just click here, this will bring this up, and here's a screenshot of what's on here. Number 1 is register. We talked about that. Number 2 is read. I stole this straight from this. Read the requirements. And number 3 is watch these technical assistance webinars. These are very, very good. And download these slides. All the slide presentations here. You see, I stole some of their slides already. So you'll want to do that. And this is a great place for you guys to start. Here's just a screenshot of the 11 pages that came out on June 11, 2021. You want to read that. Here's the FAQs that you need to get your hands on. So if you click here, you can read those. And unfortunately, they answer it in sort of wonkies or governmentese, where they answer the question, but you don't really ever feel like you've got a question, or they tend to pass the buck to somebody else. So it's sort of uncomfortable relying on some of the things that they put in there. Okay, this is where the real work begins. There is a spreadsheet that they prepared for you. It's an Excel spreadsheet, and you can download it here. So if you click here, that's gonna download an Excel spreadsheet. You want to fill that out before you go into the portal, because that portal is going to time out after 15 minutes. And if you're trying to create information, you're going to have to go in and out of the portal. It's 2-factor authentication. And so you're going to have to get a code every time it times you out. So go ahead and gather your information ahead of time, complete that spreadsheet, prepare that well-labeled computation sheet that we talked about, and have that ready, and then go in the portal and start entering your data. One thing that, again, we talked about 3 years, hang on to it for 3 years. Here's one thing that from the webinar that one of the HRSA people said: you are required to have policies and procedures to ensure these costs are applied consistently through the organization. We don't have any of those policies yet. If you've got them, share them with us, and we'll share them with everybody, because again, a lot of the small rural health clinics that we work with that have 5 or 6 employees, and they ain't making policies on this here. So here's what your worksheets look like for your general and administrative expenses and your healthcare related expenses. If you guys receive less than $500,000, you're only required to enter two numbers, and you have to enter for each one of these 6 quarters here, but your general and administrative expenses will go here. Somebody, I think I saw one of the questions before we got started. What if we use the provider relief funds to pay the increased tax burden? Because these funds are taxable on your income tax, and you can, that increased tax burden, you can use that as a use of these funds. Then that will go under G&A expenses right here. So that's where you're gonna post it. So, but you only have to put one number if you receive less than 500,000. That's going to be the majority of our clinics. If you receive more than 500,000 or more, then you have to break it down in a little bit more detail. This is why you need a good work paper to support this information that you submit to them. And you can see here, there's different sheets in this Excel spreadsheet and it goes through just the same order as the portal. So this is your first place that you want to start. Here's the bad news: the stupid metrics is ridiculous. I mean, you're a little bit rural health clinic. Your ability to have accountants sitting everywhere doing this stuff is ridiculous. The good news, as a rural health clinic, the facility metrics are not going to apply to you. You're not a hospital. You're not going to have available beds and staff beds and all sorts of beds that they're talking about there. So you can just enter zeros. You do have to enter in, you just can't leave something blank. You have to enter in zeros in it before it will let you go through. Your patient metrics, there's really only one that applies to you in there. It's just your visits. So your face-to-face encounters by quarter, you're gonna have to fill that in for 10 stupid quarters. And then personnel will apply to you guys. And again, this is so stupid. How many full-time people did you have, clinical and non-clinical? That shouldn't be too hard. You can look at your 941 reports and sort of get a good idea about how many full-time people you are. You have how many part-time, how many contractors that you've had, how many people you furloughed and were separated and hired. This is information, is for information only. So I wouldn't lose a whole lot of sleep if it's sort of ballpark, because it's not going to affect your money one way or the other. I just know that the clients that I deal with are going to have a really, really hard time of going through these 10 quarters and going through and getting really, really good numbers for this. But get started now. Maybe you can have some good numbers. Here is the period of availability that we talked about. This is from the HRSA slides here. Again, this is what we're dealing with right now. April 10th, 2020 through June 30 is what we're focused on right now. And then you could have used those funds through June 30, 2021. And your reporting time period, again, in September 30, 2021. So if you don't know that by now, we've sort of emphasized that. Here's a question. If you missed this question, you're completely asleep. Provider relief funds received in period 1 must be reported and submitted by this date. October 31st? No, September 30th. September 30th is your due date. Make sure you do that. And you've heard me say this before. Can you receive an extension? No. Don't wait till the last second to do this. Don't be sending this to me on September 30th and say, Mark, can you help me with this? Elizabeth, can you help me with this? Danny, can you help me with this? Get started now. It's going to take some time to pull this together, because you're not going to get any extensions. And then there's the reporting time period, the same information that you just had. Here's what your portal is going to look like. If you go into the portal and you're not seeing this as your first page, then you're in the wrong place. And do remember here, you must have the current version of Edge, Chrome, or Mozilla Firefox. We use Chrome, so it works just absolutely fine. And I basically log in. You should have already had a login. Again, it does have 2-factor authentication, so you're going to have to enter a code every time you go into the system. The good news is it had a contact person. We did the portal for a few of our clients, and made me the contact person. So it will actually send that code to the contact person. So I don't have to be texting doctors in the middle of the night saying, hey, can you send me that code to get into the portal, if you're the contact person. So that's good. Keys to this thing is you have to save your data. So if you don't save it, it's not going to be in there the next time you go in there. But don't push send. Don't push submit. At the very end, don't do that. Just go back one place in there and save it. Print off a PDF and then review it. because you can't change it. You can't change it once you hit submit. And if you hit submit, they're going to be asking if you owe money back. They're going to ask you for money back at that time. So you don't want to be doing that. So wait to the very end. But hit save and next. That's what you're going to do. Hit save and next. Don't hit save. If you hit save and exit, what's going to happen is it's going to send you out, and then you're going to go back into two-factor authentication. I made that mistake the first time. So hit save and next after you finish something. So here's the first thing to do is attest that yes, I agree to the terms and conditions. So we click there. We also, there's some drop-down menus here. So click on these drop-down menus. I did not see rural health clinics listed as a provider subtype. So I ended up, this was a primary care practice that I was practicing on. So that's what I use in outpatient and professional. If you guys have a better answer for me, if you've seen something in there that says rural health clinics, I couldn't find it in all the drop-down menus there. So here's my contact information. That's why they're able to send that to me. And then after you get that in correctly, you just go to save and next and move on to the next item. And then they're going to ask you some questions about subsidiaries and all this different stuff. If you're a big hospitals and you have tons of subsidiaries and all that, you're going to use this. If you're one of our little bitty rural health clinics that have 5 people and it's the only clinic, you're not going to have to deal with this. This will actually hold up to 1,200 different subsidiaries. I don't think you're going to run out of space in doing that many subsidiaries. Most of our RHCs are going to be answering no, 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 no on here because you're a really small rural health clinic. And then the good news is the portal will actually self-populate the payments that you need to report on. And so here we have the amount deposited, 5,900, 14,000. These are our 1 and 2 general distributions. And this clinic received a targeted distribution of that 103,000 plus. They got 135,000. So we're having to report uses of $155,993 in this particular report that we're doing for them. Is this information accurate to the best of your knowledge? What you're supposed to do is double check this against your bank accounts, make sure these are the exact amounts that you received. If it's the same, then you're going to answer yes, and you're going to move on to the next line. But don't worry if you don't know what these amounts are. I would go in to the portal, find these out, and then go back and find where it says they were deposited, what dates they were deposited, and then you can make sure you got that money. Okay. Did you earn any interest on the PRF funds? If you did, it will be very small, but go back and look and see what you have. What type of entity are you? Double check and make sure you get the right entity type. If you're a corporation, LLC, sole proprietor, are you tax exempt? Most of you guys, again, most of our clients are going to be for-profit, little, small rural health clinics. And then finally, are you subject to single audit? If you receive more than $750,000 of grant funds, you are subject to single audit. One question we always get is, what about that paycheck protection loan? Does that count towards these grant funds? And it does not. So 99% of our people are not going to be subject to audit, and so you're not going to have to do that. If you think you're subject to the single audits, you need some heavy duty accountants to that. Whiffley's our friends up in Wisconsin and on the West Coast. That's who I would refer you to if you think you need a single audit. That's who Jeff Bromschreiber, Jeff Johnson, those guys. You want to go to somebody like that can do this single audit. So you're talking to the wrong person here. So there's if you need that. And then this is something that's self-populated by the portal as well. This just shows that we're having a report on $155,000 of funds. So I'm going to hit save and next and go to the next one. And then this one, this is supposed to show other assistance received. These are funds that we're not necessarily reporting on at this time. This RHC COVID-19 testing, that 49,000 should have self-populated here. And then I think we got it in June. So it should have self-populated here. For most of you guys received it in June. So it should have self-populated here. It did not. So according to the webinars that I saw, the HRSA was saying that it was supposed to self-populate, but it didn't. So that's one of my questions that I have. I mean, should I report it in this HHS CARES Act testing? you know, because I can enter it here. I don't have it would not let me enter it up here because it said it was going to self-populate. So that's a question that I have. If you know the answer, let me know. We'll be glad to share it with people. Like I said, we'll have another webinar to answer some of the questions that I don't know what the answers are at this point. If you don't fill in zeros here, it's going to give you this little red thing. You have to go back in and fill that in. Again, this is a draft. So of our information that I've filled out so far, this is a draft of it because, like I said, I still got to figure this question out before we submit. But remember, don't submit. And then here's what it looks like once I put all the zeros in, and then we'll hit save and next on that. Okay, expenses. That's probably where people get the most questions about. And here's what I was trying to remember earlier. Expenses have to be used to prevent, prepare, and respond to coronavirus. That's the key terminology. You can make that just about anything. That's very, very broad. So keep your documentation. Keep your documentation for that. Let's see here. Again, I talked about this earlier. You don't have to set up a separate bank account, write a check for lost revenues. Best practice is highly recommended that you do keep that documentation paper trail. And then if you receive less than 500,000, again, just those two numbers, general and accounting, general and administrative, and other healthcare related expenses. So it's very easy for our clients that have less than 500,000, which is going to be 99% of you should be good. If you receive 500,000 or more, then that's where the more detailed information comes in. Our client here received less than 500,000. So what I did was input my numbers, and they actually spent 281,000. They did a great job of documenting their expenses. We had everything done through December 31st. And what I'm going to have to do is go in and fill in our first quarter and second quarter because we hadn't done that yet. But we had 281,000. The problem is, it says here your expenses exceed the amount of PRF funds. And what it made me do was go in and actually reduce my numbers to exactly the $155,943, which is what I did. Now, again, I have a question about why is it making me do that? So that's gonna be another question for another. So here's when I back down my numbers, I actually just had to plug out the $3,000 difference here and drop it down to 155, and it let me go forward. And I went through and read that there's a guide, there's a reporting guide for this. There's also a registration guide as well. So there's two different guides. I read in section 410 and 411 of the 73-page guide. Didn't really fully understand everything it said, what these differences were. So on our next webinar, we'll go into that in more detail as well. Right now, we're basically trying to get you guys started on this and show you what you're up against, because it is going to be sort of daunting as we go through this. The next phase is lost revenues. And we were able to put in our calendar year lost revenues, or 2019, we had 101 million. The numbers get so big, 1,085,000 versus 1,054,000. So when you look at that, like, oh, we had lost revenues of 31,000. Actually, no, we had more lost revenues than that. And we've got a slide here coming up that will help this. Here's our lost revenue was 91,085 in this particular clinic because we had one bad quarter. That second quarter of 2020, we went from 255 down to 164 in net patient revenues. These, if I could have entered in my quarters, these quarters would have been 0, 0, 0, and then my quarter right here, this second quarter 2020, we would have had 91,000 of lost revenues. That's great news here. Here's the FAQ that tells us this is the way it's supposed to work. So if you had that one bad quarter and the rest of the quarters were good, you actually had more revenue in 2020 than you did 2019, then your lost revenue only is that one quarter that was so bad for you. So that is a huge win for our hospitals, for our rural health clinics. That's really going to be great. Let me see here. And also another great news is you can carry this over. This 91,000 of lost revenues, we can carry that over to a different reporting period. So we've got 91,000 that we can use going forward as well. So that's another big win for rural health clinics and for hospitals, is to carry forward our lost revenues. This is something that it will self-populate, as it says, okay, it just gives you a financial summary. And so then you just go to the next one. Lost revenues, how do you compute lost revenues? There's 3 different ways. One is your actual 2020 versus actual 2019, which is what we use. We used option 1. You can, and this one here for rural health clinics, again, we don't have an army of accountants like everybody else does. We did not have an approved budget that was approved on March 26th. I've been working with rural health clinics for 35 years. I've never seen one with a budget that they got approved before they went on. If you show it to me, I would pass out at that moment. So nobody has budget. If you did have one, if you're a hospital, you could use that. Any reasonable method of calculating lost revenue, you can do that as well. So the answer is all of the above. Most of you are going to use A. Some of you may use this C if there's a good reason for it, and I'll show you what one would be here as well. So 3 ways to compute. Here's the budgeted. You guys aren't going to use that. And then let me see here, calculate any reasonable method. Here's the one that I have seen that might be useful. I know we have some clinics that were brand new in 2019. They added more people in 2020. How would we, our revenue, we're not gonna have lost revenue, but we did not go up as fast as we should. So that would be a way that you could identify that. Remember though, if you do this, you are subject to more audit, likelihood of audit from HRSA. What I would do is, let's see. What I would do, I know we have one clinic that they had 2 providers in 2019 and had 4 in 2020. And what I've told them is, what you need to do is take those 2 new providers off, and any net patient revenue that they generated in 2020, let's remove it and let's compare apples to apples. So, okay, our 2 providers that we had in 2019 generated X amount, and those same 2 providers in 2020 generated X amount, Y amount, and what is the difference in those 2 numbers? That's what I would recommend you guys doing. If you added new services in 2020 that sort of pollutes that computation, pull that out and write an explanation for it. That seems very reasonable that you would pull that out. So let me see here, and then I think that pretty much covers it. Okay, and we're getting very near the end. Thank goodness. Personnel, patient, and facility metrics. Again, these numbers will not go into your settlement with them, but it's for information only. And so we went in and I entered in, basically, I took the cost report and figured out how many FTEs they had and entered that number. Now we're going to go back and go to the clinic and get the actual facility metrics for this. And of course, full-time, contractor, furloughed, separated, hired, all that stuff we're going to have to try to generate for them between in the next 42 days. Good luck. And so here is our patient portal, or patient numbers, outpatient visits. We're going to go back and get these by quarter as well. These others, inpatient admissions, emergency department visits, long-term stays, all that stuff is not going to apply to us. Okay, and then we get to finally a survey. And in this survey, we'll talk about, did this help you? Yeah, putting 100 grand in my bank account, that definitely helped. And then what you do here is, how did you use those, or how did it affect your ability? Basically, you're going to start off with all these little items on this side, and you just move them to this side and it'll report to them. Yes, it helped us retain personnel, pay salaries and benefits, fringe benefits, and make lease payments, that types of things. Did it help us keep us from being bankrupt? Of course it did. Did it help retain staff? Absolutely. Did it help you to reactivate staff from furlough? Yes. Again, you'll have to answer these questions. I just put yeses in this just to get through it. And then the survey, you can write something, how these have affected you. Thank you, Riley. And really, I mean, these have been a godsend to our rural health clinics. We would have lost a lot more RHCs without these funds. So you want to say something about those, and because HRSA's never done this before, and we want them to continue. We want to thank the NARHC and everybody that has and the National Rural Health Association that have really fought for rural health clinics, and we want to show how much we appreciate this from HRSA, even though I think the reporting requirements are a little bit ridiculous on here, but the money has been a godsend to our rural health clinics. Again, do not hit submit. If you don't remember that by now, do not hit submit until the very, very end. What I would do is take this report off and print it. I made a PDF of it and printed it. I'm going to send it to clients. Here's what I've put in so far, and can you look at it and make any changes? Finally, get to the elephant in the room. Did I spell elephant right? The elephant in the room is what comes first, the chicken or the egg? Because if we claim expenses on the cost report, can we claim them in the PRF fund? Or do we have to remove that expense from the cost report? No one really knows that answer yet. And when we file cost reports, we did not remove them from the cost report, because if we remove those costs from the cost reports, our cost per visit is going to go way down, and it's going to hurt us for a long, long time. And we did not want to do that. Here's what it says here's the FAQ that is the current guidance they have. It doesn't really answer your questions. It actually refers to the M15 Manual, which back in the day, I used to have the M15 Manual in my attic, and it pretty much filled up the whole attic of information. It was in paper, and the thing I was worried is going to come crashing down on our family because it was so big. And so thank goodness it's on the internet now. But that's what they refer us to as a big, huge manual that's thousands and thousands and thousands of pages long. But what it does say is, I think it says if you're limited by, if there's a rate that limits you, and thank goodness independent RHCs have been underpaid for the last 20 years, and our rates are much, much lower than what they should be. And that really showed up on our cost reports this year. What I did was I took 20 cost reports and just randomly picked them. They happened to be ones that were a little bit bigger just because I sort of trusted their accounting a little bit better than some, again, our smaller ones have a tough time on it. And so what I did was here, our 2020 cost report, cost per visit on the cost report, you can see that the numbers went way up for 19 out of the 20. One actually went down, but the rest of them went up. It was about a 20% increase in our cost per visit. The average was $131.90, and in 2019, the average was $111.92. But look at the cap. The Medicare cap was $86.31. That means that Medicare only reimburses for $86.31. So we were $45, almost $46 over the cap. And then what I did was I computed my my visits. These are my total visits in 2020 versus 2019. You can see where that actually went down almost 10% in 2020. And I computed what I consider to be our unreimbursed expenses, which is basically just the difference between our cost per visit, $147.20 minus the $86.31. That is our unreimbursed expenses for these particular clinics. You can see every single one of these, only one of them had a small amount, 211,000. There's another one, 211,000. But most of them had huge numbers here. The average was 482, 291. I consider that to be unreimbursed expenses, and that pool is not being claimed against the Medicare cost report, and that we should be fine with that on the cost report. Now, again, nobody's really answered these questions very clearly to where you can understand it. And maybe I said it's the elephant in the room, that we just haven't really got a good answer from anybody, because I think they're sort of scared of what the answer could be. So finally, executive summary. I'm going to get this done in 50 minutes, which is a miracle. Executive summary, start now. Time is running out. We have 42 days till the end to when this has to be filed. There are no extensions. And if you don't file, you may have to pay this money back. And you see, this is a lot of money. Again, as you're working on this, document your work. You make sure you have prepare that well-labeled computation sheet and hang on to it for the next 3 years or so, or 6 years preferably. And finally, do not press submit. Review it, put it away. and then go back and look at it. I know, like I said, when I do cost reports, I like to put them away for a little while and then come back to them a few hours or the next day and then relook at them with new eyes. That will help you. And again, we still have some questions that we don't have answered yet. So that's pretty much all I have at this point. Elizabeth, you want to say something real quick before we move it into questions there? I mean, was there something I really missed the boat on, or is there something you want to add to that?
You know, spot on. Just again, if you do need help with, make sure you get those policies right. Once they start giving out too much money, they will make you have the proper policies. They just did that to the FQHC lookalikes for the first time. If you go on HRSA's website, they will help you. So if you do need help with policies, you know, you can copy pretty much directly from HRSA. And if you have any questions, let us know. I'm still getting a lot of people wanting to buy vehicles. Be very careful with buying vehicles, even though it is an allowable expense, because otherwise people like Mark or your CPA that does your audit are you're gonna have to document. So again, that's why I always say pay people costs. The money you save on people costs, you can go buy a vehicle and do what you need to do with it. Otherwise, stay on top of the reporting. And I heard from a couple of you still haven't got your RHC Vax Confidence Grant. It's probably a SAM issue, so make sure to reach out to me or NOSOR or National Association of Rural Health Clinics immediately to get that resolved.
All right. Well, thank you, Elizabeth. Danny, do we have any questions in here?
We do. We have a couple. I'll give you the easier ones first.
Okay. All right, good.
She received her $103,000 in July 2020, not in May. So what is her reporting deadline?
It's good. The reporting deadlines just extend out by 6 months. So September 30 is the current one. So that would be March 31st of 2022 would be the reporting deadline for that.
Okay. And can you give the contact again of who they need to contact if they did not get the additional $100,000 today?
It's in I don't know the website or the email off the top of my head, but it's gonna be either Nathan or Shannon. It will be in the presentation, so it's already on our website. It's already in our Facebook group. So just go to that slide, and you'll be good to go.
Okay. Do expenses and lost revenue get combined towards the PRF, or is it just expenses?
It is. They do get combined. The first step is you're going to start off with your expenses. That's your first step, and then the second step will be to compute lost revenues. And and you add those two together, and that equals what your use of your provider relief funds are.
And Danny, that brought up something else to think about too. I know a few of you have talked to me, the USDA, you can claim some lost revenues and money you spent on staff. Again, make sure whatever you're claiming, you can only claim it once. So we can't claim lost revenue from Mark on the PRF and USDA and Vax Confidence or whatever. So make sure, and talking to others in your organization to make sure that you get that proper documentation. So you can only claim those things one time.
Okay. Can we use some of the money towards rent or only rent with COVID related?
That's always the tough question about how you do that. I mean, it's very clear if you rented something that was new that you said, okay, yeah, we're going to go across town and we're going to set up a drive-through thing and we're going to rent some space there, we'll rent the parking spot or whatever. Very clear that is a use of that. It gets a little more sort of squirrely if you already had this rent, but you have these administrative people there. And already, but they're taking administrative time to relate to COVID. Can we take a percentage of that? I think in theory you probably could, but that would be very down. That would be very down. I would try to fill up my buckets with more clear expenses than just that. So does that make sense, Elizabeth?
Yeah, I mean, if you rented, I know some of you rented like extra space or an extra suite in the same building, that's easy to meet the demand. Or added space, yes, all those costs would easily be allowable, but yeah, it's the other's a little harder to document.
Yeah.
Okay. In the reporting, there's a portion for how much we received from each insurance type by quarter. Do we not need to fill that out?
That's what, that surprised, that did not show up when I was going through there. You will, I think eventually you'll need it. I mean, I saw it in the webinars, and I've seen it in oh shoot, the tool thing that they gave us, but I didn't see it when I went through. Elizabeth, have you seen it in there when you've been working on it? Yeah, and that one really scared me because these little rural health clinics having to break down by quarter, by Medicare, by Medicaid, by self-pay, by insurance companies. We don't have an army of accountants to be doing that. So, when I went through the portal yesterday, it didn't require me to do that. So.
And if it's not required, don't fill it in. Same thing on any grant, any report. If it's not asterisked or an absolute required field, leave it blank. I always say it's like giving a deposition. You just answer the attorney's question. So answer the questions that they ask, even though there may be extra boxes to fill in. If it's not actually required to go to the next page, I always leave it blank.
Yeah. And what I'll do, that the next time we do this webinar, in probably about 2 weeks, I'll be recovered enough to do another one, and we will have done a bunch of these for our clients. Is we'll have another webinar, and I'll have one to where I didn't have fully used my expenses, and we'll go through that as well. So I would hold off on doing that until you actually absolutely have to. Okay, next.
Okay. If we used our PPP loan for payroll, can we use that expense for the PRF and the grant?
No, you can't double dip. If you use money for PPP loan and you use that to pay your payroll, that specifically cannot be included in here.
Okay. If
now,
we hire
it's the same person, so let's say that you paid Mark, for 2 quarters out of the PPP loan, and then and so then that's all it covered, and then you needed another quarter, you could cover that. So you can cover the same person, just not the same time, which I think was what Mark was getting at too. So if you've already covered Mark's salary for Wednesday through one program, you can't cover any more on Wednesday. But keep in mind, you always have other staff and people working, and think about them too. It doesn't always have to be the provider or the lead person that's getting paid. It can be the person scheduling things, etc.
Yeah, I think there's the PPP loans covered 2.5 months of salary. So basically you can take Elizabeth's salary for for everything except for those 2.5 months, and you could use that.
Okay. Regarding the grant opportunity Elizabeth mentioned at the beginning, would we be able to expand the parking lot for additional COVID-19 parking? We are seeing a surge in cases and having parking and traffic issues.
Yes, that should be allowable. Again, they're extremely vague on this. The way I read it, that's easily allowable because it is an alteration renovation. You would have to make sure ADA accessible parking lot, which I'm sure you have anyway as an RHC, unless you've been grandfathered under old clauses. So you will have to follow all the USDA rules. Sorry, I'm used to saying UDS and the FQHC rule, but all the USDA rules, and you will also need to report on that accordingly. So if you want to go after that, that would be a track 1 recovery grant proposal. So yes, that would be allowable. And you may want to think of some other projects you want to do along with that, because I doubt, even though parking lots can be extremely expensive, it's not going to be up at your highest point that you can request. So you might want to consider doing an additional project along with that.
Okay. For reporting, we have 2 clinics. One is certified as an RHC and the other is not. Am I correct that the expenses and revenue should only be reported on the RHC?
That's correct. Well, wait a minute. I mean, one's not an RHC. They did get provider relief funds, so you can. I was thinking of the targeted distribution on with the RHCs, but they have general funds that went to it. So both of those entities would be reported in that. That's sort of like when you get into that subsidiary thing there. So yes, you could do it on both. Is that right, Elizabeth? That's
yeah, I don't know. I can't answer that one.
Yeah, I think that one would be, because those physician practices that weren't rural health clinics did get provider relief funds.
That's true. Yeah,
So that's why it would definitely count. You just have to go into that section where it talks about subsidiaries and all that and make sure that it's reported there.
Correct. Yeah, you're right, because everybody got the PRF. Yeah.
Yeah.
Okay. Is there a time period, this kind of goes back to the parking lot. Is there a time period the USDA money needs to be tied to the expense for a grant? For example, making a COVID drive-through that can be used for something else in the future.
Once again, you know, it's hard to answer definitive questions about USDA because it's extremely vague. I know I keep saying that, but I'm like Mark's guy with the crystal ball, so it's difficult. I think they named the date in March when the world shut down, for lack of a better description. I think it can be from March 15th, 2020 through today, and then you have to spend it within 3 years of funding. So I've already heard they're afraid they won't have it all spent by October, so it may be even into 2023 before they make all the awards, and then you would have 3 years after that. So you would have, really, you almost would have from 2020 to 2025 to get it all spent and things done. But again, I've talked with some of you, it's so hard to get construction people. I was hearing stories yesterday where we had providers out adding additional space because you can't get construction workers to come and get those things done within reasonable timeframes. But yes, the theory is it's not like they're going to say, no, you have to close down a drive-through. If now you can use it for a pharmacy, you can use it for another service. I'm sure that's what they're going to think about with COVID-19. With USDA funds, they're usually flexible on that. But again, this is unlike anything they've experienced. Some of you have called me very upset that you've called your local office or your state office at USDA and they're just giving you a non-answer. Again, this is unprecedented times. I know we get tired of hearing that, but this is unlike anything they've ever done. So I can't say for sure, but ideally you have from March 15th, 2020 until 3 years after the date you actually receive your check.
Okay. Hey, Danny, I think we're right on the hour, so let's be respectful of everybody's time. There's a bunch of questions in here. I will address those the next time in 2 weeks when we have the webinar, or a lot of you already know and got your email, so I can email those answers to you. Elizabeth, thank you as always. We will see you definitely in 2 weeks on August the 27th when you have your webinar, and sounds like you have a lot of interest in that particular program. And thank you guys for what you're doing. I know it's, like I said, it's getting dangerous out there again, so be very careful, and thank you for what you're doing, and we will talk to you very soon. Get started. I guess I will leave you with anything is get started on this because it has to be done by September 30th. All right, thank you.
And again, we will try to respond to any questions you have. Mark is on it, I know, with the questions, and I try to too. So thank you all.
Okay, thank you. Bye-bye.